Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, the 7th of September. And my name is Russell Shong, Senior Market Specialist at FXCM, and my email address rshore@fxcm.com. Just going to bring up our high risk investment warning, which has been cut down a fair amount. So I'll keep this on screen for a few moments. And here is the market commentaries disclaimer. And just finally, our references, Market Scope, Bloomberg, and Trading View. I'll bring up Trading View. I just want to show you something that this indicator, Rob sent me an email yesterday. I've got my head around the indicator. I've got to think about it, but it's called the SATA. So what's the SATA? And it's really based off of, as far as I can tell, Stan Weinstein's stage analysis. I've got to give it some thought, but I did tell Rob I'll let everybody know. If anybody wants sort of information about this, Stan Weinstein's book, right? It's the you can find it on Amazon. I think it's a pretty good. I think it's a terrific book. Not a pretty good book. I really think it's a terrific book. I just got to get my head around this. So you've kind of got phases. We can just say here is some sort of accumulation. Here is a markup. This is a distribution, markdown, and into accumulation. What's the instrument? Well, the instrument actually what we looked at yesterday. It's the 2-year yield of Germany versus the 2-year yield of the US. So I can see kind of the red here. The red shows the markdown, and the greens are the mark up. I just want to give this a little bit more thought. So I wanted to just let you guys know, and thanks very much, Rob. This is very interesting. With that done, I want to go through the Bloomberg email. Howard, Anna, morning to you guys. Lots of thank yous coming through, Rob. So, all right, let's go through the 5 things to start our day. The first headline reads support package. Liz Truss promised a major package of support this week to tackle soaring UK energy bills. In her first national address as leader, her speech was dominated by a cost of living crisis that is likely to make or break her premiership. She succeeds Boris Johnson, with the country facing brutal economic headwinds that threaten to plunge millions of Britons into poverty this winter. Her team is expected to announce Thursday an economic intervention that could see the government spend as much as $200 billion over the next 18 months to contain energy prices, according to sources. If Truss does freeze energy bills for households and businesses, Britain's inflation rate may have already peaked. Okay, so lots happening there that we've got to keep our eyes on. Next headline reads ruin bets. After spending much of 2022 playing defense, hedge funds are reasserting themselves with aggressive equity bets on both the short and the long side. Hedge funds have raised exposure in back-to-back weeks. Data from Goldman Sachs prime brokerage shows. Short sales have increased via macro products such as index futures, while buying shares of individual firms. The same trends were observed by Morgan Stanley. The data suggests that money managers are both keen to pick up bargains, which we've hinted at, but leery about the broader market's direction. So I'm not sure how you reconcile those two elements, nevertheless. And so hedge funds are gearing up for Son's Hong Kong Investment Conference with 2021's bullish bets in tatters. Dollar pain. Developed economies are taking a hit from the dollar's appreciation to multi-decade highs in ways that were once more familiar to their emerging market peers, fueled by the Federal Reserve's most aggressive tightening cycle in more than a generation. The stronger greenback is pushing rival currencies lower, driving up the cost of imported goods, constricting final conditions and feeding inflation in other economies. That's ratcheting up pressure on central banks in Australia, Canada, and New Zealand to raise interest rates, just as an energy crisis and spiraling consumer prices hobble Europe's economies. Yet, their ability to influence the dollar strength is limited. While global ripples from Fed tightening aren't new, this is the first episode in recent years where serious dollar strength has been more notable against developed nation currencies as a group than versus emerging economies. New market. Russia wants to buy millions of rockets and artillery shells from North Korea to use in its war against Ukraine, in a sign that Western sanctions on its military and economy are starting to bite, US officials said. The move would violate a United Nations arms embargo that Russia voted for. Meanwhile, 1 week into Ukraine's counteroffensive, the operation's limited scale and goals in the south are becoming clearer as the two sides head towards a long and difficult winter. And Putin has a fresh battle on his hands. He now wants to win the global fight for cultural supremacy, which is in speech marks, and it's a link. So I don't know what cultural supremacy means, but I can click on the link to find out, which I don't really want to. All right, let's just see what else we've got here. European stocks are headed for losses as the dollar gained on bets for aggressive Fed tightening. Apple is expected to unveil the iPhone 14 and its next slate of smartwatches at a launch event. Bank of England Governor Andrew Bailey appears before the Treasury Committee. The Fed releases its Beige Book of Regional Economic Activity. The Central Bank's Vice Chair for Supervision, Michael Barr, participates in a Brookings Institute event, while Cleveland Fed President Loretta Mester also speaks. Expected data includes industrial production from Sweden, Norway, and Germany, as well as Italian retail sales. NEO, Copart, and GameStop are among companies scheduled to report earnings. All right, that was a long one. Let's do a little bit of work, because lo and behold, we've got the crypto minute as well. So I just want to run probably a little overtime here, just because I logged in late, and then we'll cross over to the crypto minute. So what I want to do is carry on with regard to our discussion that was started yesterday. We were speaking about the euro, and if we just go through to the daily here, what was interesting, of course, is that whilst we talked about this accumulation that is taking place in the spread, and when I say accumulation, that's really accumulation question mark, because it's still got to break upwards, because if it breaks downwards, of course, it's not accumulation, it's distribution. Point being, what this is a measure of the aggressiveness of the two central banks, the ECB, and of course the Fed. And what was interesting was the movement in the euro yesterday. So we flagged it, okay, and I just want to run through that. So we had this down. Okay, we had this on Monday. This is after the claim that Russia had turned off the Nord Stream 1 pipeline, and let's just put in some. Let's put in the history and the historical pivots here. And it dropped all the way to S2, as I recall. Yes, so all the way to S2. It found support here at S2, and then it started moving up, started moving up. And when we spoke, the idea was, yeah, let's keep an eye on this. I'm not sure that this is going to have the legs that that we're seeing, simply because there is a huge tailwind behind the dollar, huge tailwind, and that tailwind is real rates. So let's just put these fundamentals kind of in sort of line them up. Then we'll go back to the technical. So the first fundamental is, yeah, there is some sort of movement in the ECB, but it's not impressive. We're still very much in this kind of accumulation / distribution. I don't know yet. Really, there's no major impulse here. It's kind of a half-hearted attempt until proven otherwise. Why do I say that? Well, we've got a lower peak. Okay, here's the peak trough. There's the lower peak. So even the sort of flexing, the sort of flexing of muscles by the ECB, I think the market's questioning that. I think they're coming out guns blazing tomorrow. I think we're going to see them coming out guns blazing. Whether the market believes them or not, that's their challenge. They've got to make the market believe them, and perhaps this spread starts pushing in the northeast direction. So that's the first problem. The second problem is the real rates. So we just go through to US 10-year, and we want to take out the break even. Okay, and that's this is the formula to work out real rates, and you can see that it's just rampant, as rampant. Okay, I haven't got my zones here, but you can just see that this is very strong. We have resistance here. It's going to be interesting, but we'll see if it takes it out. Here is that 30-week exponential moving average. So this is the Stan-Weinstein moving average. Turned up. It's moving up nicely. So we've got the real rates that are looking really strong. We've got a market that needs to be convinced by the ECB. That's the challenge. And we'll see, of course, how President Lagarde communicates tomorrow. But those fundamentals set up a very interesting dynamic yesterday, and it hit this R2, and then it came down. And I did manage to take a few pips out of this. I could see that the S1 level was acting as strong support. The reason that I think there was support here is that the services PMI came out at 4 p.m. my time yesterday, which would be 3 p.m. UK. It was a very good number, actually. The services PMI for the US, it was the highest number in 4 months. It's effectively a service-based economy, and it did benefit the euro to some extent, but only as far as the central pivot, and then it failed. So that's just some sort of I guess feedback on what we spoke about yesterday. The idea here is the euro's on the move again, so I think there's going to be a lot of people looking at it. It's much more difficult to trade the euro now than it was yesterday, because we are getting closer to that ECB meeting. That ECB meeting naturally is going to introduce an element of volatility, and I think it's going to shoot up. I think it's going to shoot down, or it's going to shoot down and then it's going to shoot up, and then it's eventually going to settle. Okay, so that volatility is going to be, I think, quite vicious as the statement comes out, as the press conference goes. But the rallies here, I think, are certainly going to be very, very interesting to market participants. So that's just sort of a debrief from what we looked at yesterday. The last thing is to say, and then we, I think, go through to the, we'll take a look at the DAX, and then we'll go through to the crypto minute, is the reason also that this S1 level was, so the reason you can see it was a fairly strong level is your stochastic it never held. See, it's got to hold a 20. If it holds that 20, there would have been a more potential for a swing, but it kind of hit the 20 and bounced out. So only a few pips, in it. How did the US PMI come out well for the euro? Did I hear you correctly? Yeah. So because it came out not well for the euro. It came out better for the it came out for the euro because it affected the US dollar. Now think about it this way: it's a service-based economy. We are looking now at a let me think about this. I think maybe you got a good point. Let me think about this. All right, so okay, all right. So what effectively happened, okay, is that the US PMI came out. It beat expectations, and it was the best number in about 4 months. What subsequently happened is that it introduced a risk on sentiment into the US markets, albeit very briefly. So if we go through to the S&P 500, you can see that this is the candle over here. Actually, we got an article that I wrote about. I said there's this risk on sentiment that's been injected into the market because of the PMI, best number in 4 months. However, be very careful. The EMAs are still pointing southeast, and we don't have a crossover in our stochastic. So that's the last article. To be very, very careful, because there is a risk on sentiment. But how is that risk on sentiment going to sort of catch? And it really depends on whether we get the crossover signals, which never happened. But the fact of the matter is that there was a shift to a risk on sentiment, albeit just for 2 hours. For the first hour, quite obvious. The second hour, we're starting to get a little bit uncertain. The third hour, it starts capitulating. So at the moment, the US dollar is let's go back to the euro, is a haven. So as soon as there was that slight injection, of risk on, there was a sort of a shift in capital, moving out of the havens, and at this stage, one of the havens being the US dollar, but only for those 2 hours. For those 2 hours that we saw on the market, and then the market faded, and then the euro faded. So the strong PMI, I think your question is actually a very good question, was really based on a sentiment over 2 hours more than anything, just shifting capital into that S&P, hoping that they could catch a bottom. Does that explanation help? And that's the way that I saw it last night, and well, that's the way I saw it about 5 p.m. my time. All right, cool. Alrighty, I think then let us conclude at this point, and let's shift to our crypto, because there is some interesting developments on the crypto side of the market as well. So I'm going to conclude here, and I'll see you guys in the next 2-3 minutes.